What's up, family? TK Prophet joining you guys again to do another live charting session. Let's go ahead, drop that intro, and get active. All right, you guys, I'm a big kid, man. I like to play around and have fun. That's a big tool with this thing. You keep your energy up. Stay excited about the market. Look at your quote-unquote losses as lessons so you can learn from them and celebrate every little win that you have, whether it's a lesson or an actual win, and you'll definitely keep the proper mindset to be consistent in the market, because really everything starts here. And so let's go ahead and jump in. Last night, we took a look at a couple pairs. And really, even though the news was high volatility, nothing actually happened. Things still consolidated. So normally about 10:30, we get a little spike in price. We're going to check around for these for a few minutes, then wait to see if the market will give us some impulsive moves. Then we'll go from there. Look like V logged in. How y'all doing this morning, man? How y'all doing today? All right, cool. So the ones we took a look at were the indices. Grateful, yeah, that's that talk right there. The realist, what up? Divine, man, you might as well go ahead and set up an account and get active with us. Matter of fact, I just updated our free course. Let me go in here and copy our website. So to get access to our free course, wrong one. To get access to our free course and start trading with us, you guys come to the main website, go to courses, come down here, put in your info, and it'll send you access to the free courses. So let me copy this, drop it in the Facebook group. That way, you can follow along and make money with us. You can also set up your demo account so you can start to test it out. Just see how everything works, and then once you get comfortable, you can go live, or I could send you guys a link to trade with a prop firm instead of using your money. But either way, you can earn. All right, cool. So with US 30, we wanted to see a retest of the highs right here. On the daily, we got a structural level right here that's just been broken below. So we want to see price pull back to retest this level before continuing that downtrend. There's two ways we could approach this. We could either wait until price falls beneath to retest this level, then buy from there. Or if price breaks above to hit this area first, we can sell to retest this level. Either way, no matter which route we go, we want to see what happens when price reaches here. So far, in these last couple of weeks, all of the indices created higher highs, okay? Now, there's nothing in the economy that is supporting the massive impulse we got to the upside with any of these indices. So honestly, I think it's a bunch of bullshit. I think it's market manipulation. I think it's the elites pretty much driving attention to the market to get people to invest so they can take all of their money because they do it all the time. It's the way this thing works. Peak interest and then they sell, okay? So this is the key area that we're looking at the moment. This area here and the lows that I just showed you. Today we don't have any major news, so we probably won't get any crazy impulsive candles. But what we can do is just look around to see if anything is moving already and see how we can execute. But yeah, the indices are still pretty much trading in range. Yeah. Let's go ahead and trap price. So when you see price moving sideways like this, okay, they call it consolidation or they call it range. To make it easier for yourself, just take two rectangles, figure out where you have more highs that are touching, so where you have relatively equal highs. Make your rectangle the same thing with the lows. If you look here, I pretty much got the lowest points, and I found these areas where price maybe wicked this zone. That's how I use the rectangles to identify range in the market. Okay. With the uptrends, you're looking for price to be making higher highs, higher lows. Like this, for example. Let's get rid of these candlesticks. If you just look at it from this perspective, like these are the lows, everything on top will be the highs. So as long as price is making higher highs and higher lows, then that is what they would consider to be an uptrend. Vice versa, when things are moving down, you're looking for price to make lower highs and lower lows. Okay? So really being able to identify the three different phases of the market will help you, because then if you start to see this, where it's making relatively equal lows and relatively equal highs, you know that it's not trending. In a lot of cases, most traders do not have the discipline to just enter and exit at these structural levels, like the highs and the lows. And if they get a sale, they're looking for this thing to continue and break beneath the lows. And in most cases, that doesn't happen too often in range. What you'll normally see is just a retest, and price will pull right back to those highs and fall down again. Okay? So what I was suggesting to you guys get a little more comfortable is try to only trade when the market is trending. Whether it's trending up or trending down, you want to wait until you find a trend in the market. Yeah. Let's just leave these alerts. Yeah, absolutely nothing has changed. And that's fine. It's only Wednesday. But let's see. So we were in this, well, not where we're still in this AUD, CAD trade setup. We hit TP1 and TP2. Big dubs. Win. We hit TP1 and TP. Oh, man. Got echoes. All right, so what we want to see is if this thing will break the lows. It's pretty much trading in consolidation as well. But we want to see this thing break the lows and head down to our TP3 on a smaller time frame. What time frame was it? The 30-minute. Yeah, I saw a flag right here. So we're looking at the possibility of price maybe rejecting at this moving line of support we got going to hit this area and then continue the downtrend by the end of this week. So maybe Thursday we could see a continuation in this move. But let's find something. Let's find something trending. Okay. So right now, this is a way that you figure out when a trend is changing. Okay, so let's say you used your rectangle tools to trap price to figure out where range of consolidation was. Now, I'll give you both examples. This original trend was a downtrend here, okay? You know it's a downtrend because you got price creating lower highs and lower lows right here until it reached this area. Now, price breaks above this structural level of resistance and retests that zone. We'll call that a downtrend structural break. So this area right here will be an area of interest. If price retests that area and it holds, meaning that it does not fall below it, then we look for buys in the market or look for price to move up. Okay, and if you follow this really simple hack as far as identifying when a trend is broken, then you'll definitely put yourself in a good position to make wins. And if you look at the highs, it's the same thing, okay? Exact same thing. So let's say price was consolidating right here. Look at what happened. Price broke structure right here. Now in a smaller time frame, let's see if we found a retest. Oh no, that thing took off. Yeah, sometimes it'll break really strong. We had news that day. Sometimes you get a strong break, but in most cases, when you see that break, you typically get a pullback to retest that area. But it's still the same concept. That break lets you know that this uptrend was no longer intact, okay? And if you look at it and you retest it yourself, you'll definitely see the same thing. So it's a thing that we call back testing. And that's just pretty much going to higher time frames and scrolling back as far as you can just to test theories or test strategies. So same thing here. That area was consolidation. What did price do? It broke beneath it right here. In this move here, this is that retest that I was just telling you guys about. After that retest, boom, you get a major drop in price. So that's a key, major key right there. So right now, we want to see what happens here. With the way things are shaping up, we could definitely get a pullback to the 50. Let's see what's in there on the smaller time frames. Okay, we got a double top right here. So we can tighten that zone up a little bit. All right, so a double top is normally a reversal pattern. And when you see it in the market, In most cases, what'll happen is a downtrend will precede this pattern. Excuse me. Typically, when I see that pattern, I do exactly what I'm doing now. I find the right shoulder of that reversal pattern, and I put a limit order there. And I just let price come back to let me in this trade, okay? For those who are not familiar with limit orders, there are different types of orders in the market. So you have market orders, limit orders, and stop orders. A market order, it executes whenever you hit buy or hit sell. So let's open this demo account, give you an example. Demo. All right, cool. So let's say you want to get in the trade right now. Price is at an area that you think is fit. You just go ahead and you hit buy. So this will be a market order, okay? Excuse me, sorry about that. Now with limit orders, let's go ahead and close it. With limit orders, those are orders that you set when you think price will maybe retest the level below or above before executing that position. So let's say, yes, I'm still looking for a buy, but I want to wait until price hits this bottom zone. You just come down here and make sure that your chart doesn't, where your trading window doesn't say market order. Make sure it says limit order, okay? Then from there, you just set the trade. Now, what happens is, if price falls to retest this area, that trade setup will be activated. And if it continues to go up, I get to win, or I get to catch that move without actually being around when the trade is activated, which is a beautiful tool to use, okay? Same thing for the highs. If you're looking for a sell and you don't want to necessarily sit around and watch it, the market lets you place orders where you can be in position to make profits without being present. And that's typically what we do, because I don't recommend anybody just sit around and watch the market all day. That should drive you crazy, okay? One thing that I say, and I'm going to keep saying it until my face is blue, this is a means of escape, okay? You already give these jobs 8 to 10 hours. The last thing you need to do is get into something new and approach it with the same tactics or mindset that you do with the job. This is about freedom. So we have to learn how to properly use the tools that they provide to us so we don't have to be a slave to this machine. It's freedom time. All right, so that's an example of the limit order. If the market comes up and it hits that area, it's going to activate without us being there. You can set some alerts to let you know when price gets close so you can monitor it, but you don't have to do much. That's why we only do an hour for our charting sessions and an hour for our live trading sessions. So those are examples of limit orders and market execution orders. Now, they also have something called stop orders, and it's another nice tool. So with the stop orders, you use them, and if price, so this is a buy stop, if price continues to go up, as soon as it passes that order, that trade will be active, and it's another way that you can make profits without being present. So really, you just have to base it on your analytics, whatever you see in the market once you analyze everything, and that'll let you know which approach you should take as far as executing. But understanding how they all work and when to apply them definitely puts you in a good position. All of those things that I just covered, they are in our book that's available on Amazon, 6 Steps of Training with Consistent Results. So feel free to check in on those things. All right. To get to it, you'll find it on our website, Yep. ProfitTakers.eu.com. You just go to the book section. It'll show you all of our books in our collection. It'll redirect you directly to Amazon. Yeah, so we're going to set some alerts right here, because this would actually be a nice buy on AUD USD. That's a little over 130 pips. That's a nice move. Let's see. Oh yeah, we'll definitely see this probably the end of today or Thursday. When you're looking for reversals, they have indicators that can help you out. So all indicators are lagging. What that means is they move after price movement. So price moves first, price is number one, and then you have these indicators. But the thing about them is they help you in certain areas to give you extra confirmations on your trade setups. So in this case, what we are looking for is a reversal. We call it a reversal because price was going down, but we want to see it go up. So we're looking for a reversal. In doing that, the indicators helps you by identifying where your 200-day EMA is and your 50. If your EMAs are not close to price, like touching price, then that reversal that you're looking for is probably not going to happen right then. So right now you got a 70 pip gap between our 200 EMA and what price actually is. So in saying that, I'm going to find an example to show you what I mean by the EMAs touching so you can see it for yourself, okay? So this is a perfect example right here. So both of the things that I just showed you, this gives you an example of it. All right, so price was in a downtrend. You see this? This is a downtrend. All right, once price created a lower low right here, let's look at what happened. Your EMAs caught up with price. And at this area, all of your EMAs are close. And when that happened, you got a break of that trend. So let's say this area was range, and this is where you have that downtrend structural break. But it did not occur until all of the EMAs got close. Figure this out from years of back testing, okay? So that's a telltale sign that you'll either get a continuation in the current trend or a reversal. It's pretty similar at the highs as well. All right, cool. So right now, that's exactly what we are looking for. Let's see. AUDJPY. We got all of the EMAs close right here. So far, let's go out to some higher time frames to see what exactly are we looking at. Uh-oh. Another thing, I don't use indicators to find trade setups. I use price action alone. And after I find what I'm looking for, as far as the charts, from that point I look at the indicators, but only for extra confirmation. Okay. All right, so pulling up our Fibonacci tool. The Fibonacci helps you by measuring retracements, okay? Let me help you out. A retracement is just a pullback. So if you see price moving up, anytime it drops, this is called a pullback or a retracement. And that Fibonacci tool helps you by showing you how to identify the major levels in the market. The major levels that most people look at as far as the retracements are the 786, the 618, and the 50 fib. Okay? So if you hear me use that verbiage, or I'm looking at the 618, the 50, I'm referring to this Fibonacci retracement tool. Just another tool that we can use to see how deep or pull back could go. Now on that chart that we were just looking at, we got price trapped between the 382 and the 50, okay? So it's consolidating right between these two levels. This looks like a double bottom. Yeah, it is. So on the 618, we got a pattern that they refer to as a double bottom. Normally when you see those in the market, they're like the opposite of the double tops that we just looked at. So when you see the double top that resembles an M, price normally falls after that, okay? With the double bottoms, it's the exact opposite. You see those printed in the market, price will typically go up. So right here, one was printed on the daily, but it has not been retested. So what we want to do is just set a zone right by the right shoulder, okay? So if we're looking at that double bottom, this side right here would be the right shoulder, right here. So what we're doing is playing this area to see if price pulls back to touch this area, if it will hold. If it does, we are taking the buy. So most of trading is psychology. You got to understand how to recognize these patterns, which comes with practice. It is not difficult. If you learn the English language, which is the dumbest fucking language to me, you can learn how to trade. They using all of these F sounds, but don't use F. Oh man, that shit used to drive me in school. How you spell phone? PH. What? The fuck happened to the F? Like they just abandoned the F. So this language is dumb. If you can understand English, you can definitely learn how to break down what the market is telling you. Just a matter of practice. They do have an app called JCP, Japanese Candlestick Patterns, and it'll show you how to identify patterns in the market, and it'll also show you how to use them, how to execute on these pairs, okay? So it's just a matter of practice, man. If you can drive a forklift, you can trade. This thing is really simple. It's just getting over what you think hard is and just letting it happen, all right? So from here, we're going to set an alert underneath this 50. All right. Because what we want to do is be patient. If we get that rejection that I was just talking about at this 618, looking for that buy, our TP3 was not hit on this trade, so we'll take it there. That gives us a 1 to 6 trade setup. That means if you take $10 and you put $10 on this trade setup, your return will be 60. If you put 100 down, that's a $600 gain from this trade setup if everything plays out. Okay? And that's how risk reward works. That's another thing that people fail to take advantage of when you're trading. Risk reward is your strongest tool as a trader. You decide when you're going to enter into the market and when you're going to exit. Most people approach it like gambling. When you see things like this, where somebody is taking a 1 to 2 trade, or they're taking 1 to 1s, I want you to just think of it from simple math, okay? Because most people are really impulsive and they don't have the patience to wait, okay? So if you taking trades and you're only putting up $10 to win $10, do you know how accurate you would have to be in order to have a winning percentage overall? You got to hit at least 70-80%. Okay? On the other hand, if you make sure that you're taking nothing less than 1 to 3, you can have a 40% winning average and still be a profitable trader. That's going to hit y'all one day, but that is fucking powerful. So that means you at the 3-point line, you hit 40%. That's good. You're a basketball player now. And that's what we want. We want to make sure that we control this risk reward so everything is in our favor. Us, on the other hand, most of our trade setups are around 6 and 8, or 1 to 6 or 1 to 8. So we get great positioning. Well, we put ourselves in great position by making sure that the risk reward falls in our favor. Okay? So that's another tool for you guys. So it looks like nothing is actually going on today. And these sessions are also helpful because it'll let you see a professional trader do nothing. Most people, when they trade, they feel like they gotta be in the trade, so they just take setups without getting anything valid to base it on. And that's another reason why a lot of people lose, just feeling like you gotta be in the game, even though nobody's playing right now. So that's cool. We just have a little learning session today. Yeah, nothing is moving. Yep, so we'll just set a couple alerts and we will get back on tonight during our charting session to see if anything has changed in the market. But so far, when I tell you everything is consolidating, trading sideways. Yeah. Yeah, just one of those days. All right, so when the market is like this, I call it family day. Find something productive to do. Yeah, because nothing is happening. Okay, let's see what oil is doing. All right, so right now, let's take a look at our Fibonacci tool. We want to measure this retracement. So from this point to this point, that was a nice impulsive move. Which one of those highs are higher? I think it's this one. So I want to see where the fib levels align in relation to this uptrend. So you find the lowest low over here, which is this one. We're going to take our fib and put it on the high, which is right here. Let's get rid of this micro fib we got up there. Okay. What is that? Okay, so we got another double bottom right on the 786. And it just so happens to align with our trend line right here. So as far as oil, just looking at the daily, there is a chance that we can get a continuation in this downtrend that it's giving us right now to retest this 786. Okay. Now looking at the 4 hour, it is creating a bear flag. But this is the thing about these these higher time frames. What you want to do is wait until that candle closes to confirm it. So if you look to the left, we got 3 hours left in this candle. So at this point, there is still nothing that we should be doing right now. But we'll check back in 3 hours. If this candle did close in this fashion, we'll set a limit order. So what I can do is just go ahead and get this thing set up just in case, so there'll be less things that we have to do. Go down to the 786, and that gives us a 1 to 4.4 trade setup. All right, we'll place TP3 at the lows. TP1 will be right here. TP2 right here at the 618. So we'll come back, like I said, in 3 hours to check if that bear candle does close underneath in that area. We are going to place a limit order on this trade setup, and that'll be it for today. So thank you guys for your time. All right, let's get out of here. Y'all go find something to do. Y'all go find something to do. Be great. So, again, to get access to our free courses, head over to our website, ProfitTakersEU.com. All right. From there, go to the courses tab. Locate our free courses. We got our free 9-day course that helps you place and monitor your trade setups. And from there, you'll learn how to get in the swing of things so you can execute with us when we find our setups. We also have our structure breaking free trial. This is the key to unlock everything. Unlock your mindset, okay? It also comes with our 6-week journal. Beautiful series, all right? For the do-it-yourselfers, we got the book that I was just telling you about on Amazon, 6 weeks to trading, 6 steps to trading with consistent results. We also have our trading log books. They help you not only log your trades that you take so you can learn from them, but also your emotional state in the process, okay? Outside of that, we got our merch. Go support the team, all right? And remember, you're one trade away from living, man. One fight to stay the same.
Okay, let the streets know. Okay, let the streets know. Okay.
World of my